Hi, it's Steve and Joe from Freshagenda, and Steve, we've got a bit of an agenda to get through this week, starting, of course, with the GDT results for last night.
So a mixed outcome, and it gets really worse as you go towards the right here. Worst being cheese. So varied outcome, not only across the commodities, but also within interpreting those results. So many things to look at. Very good for, I suppose, positive for powders. They didn't fall.
Yes.
Following the, I guess, the realities for the Northern Hemisphere works both ways. So we'd seen a settling of prices in Europe and US for skim milk powder.
Yep.
But the reality being the gap between butterfat and cheddar between New Zealand and those regions.
So they had a bit of falling to do, in other words, didn't
Yes, they did. Yeah, quite a bit. And there's, it's left us with a healthy difference still between butterfat and cheese, while we've got powders more in alignment.
Sure.
Over time. Just a word of caution in reading the results. The words there about the whole milk powder product. There's instantized product again in the results, which caused some of the later periods to jump and the averages look a bit weird.
Yeah, so it's not necessarily apples and apples.
No.
Yeah.
It is a reasonably flat result, but there's odd things within the detail.
Sure.
Big question for the Australian region, however, is where cheese prices end up in a few months.
Yeah.
So we've seen the US put on a pretty strong recovery in the last few days, jumped $500 for blocks and barrels.
And that's basically on a bit of reactivation in food service, which we'll come to later.
Yeah, it's, I guess, signs that we've got buds of growth occurring in demand and some positive sentiment there. There's been some planted eruptions last week.
Yeah.
But this, I think, is mostly about the demand side coming back.
Sure.
New Zealand has started to lose. GDT wiped $500 off the cheddar prices for C2.
Yeah, which had hardly moved really.
For weeks.
Yeah.
While Europe is very stable at about 3.4. So the great question is, by the time we see fresh Oceania product being offered again out in Q3, where are those prices going to meet? And that's the acid test for Australian milk prices.
Well, that's exactly right. So maybe 3,500 around that neighbourhood.
That's what we're betting on, and that's where our early price outlook is based. It's getting to that level.
Sure.
Interesting to watch. And the impact on New Zealand farm gate values now starting to fall. Here we've seen there essentially the spot value of milk coming out of GDT results has gone under $6.50 for the first time in a while. Pulled down by whole milk, as you can see there, which is the strongest relationship. So look, an interesting result in the detail. And what helped the powder prices is this return to form of Southeast Asian buyers.
Yeah, which is a bit of a relief. They've been so important in balancing the market over the last couple of years, especially when prices get a bit keen. So they are back and buying.
Yeah, back and buying a first sign. We've tracked their involvement in the skim milk powder market as being well below trend. So we're thinking maybe prices have shown, the typical reaction on the buy side. You see some traction, you see prices starting to move, buyers come back in because game's up. So it's time to move. So let's see if that continues.
Not so much activity from China this time, although they've been there very strongly in the last couple of events. Yeah. Just holding back a little bit this week.
Just step back a bit. Yeah. Demand for both powders was strong. So best demand ratio we've seen for some time.
Yeah.
And so it is encouraging that we've seen the floor.
Sure. Let's hope so.
A swathe of US data.
Yeah.
This week.
Quite a lot.
So a product output report which just confirmed the continuing growth in output of milk powders and butterfat and butter, per se, that whilst we saw about a 4% growth in manufacturing milk, taking away the fresh, fluid milk product consumption, we've seen cheese pretty flat. So there is a product mix shift underway, and the powders and fats benefit from that. And you can see how skim milk powder production probably wasn't as much as what might have been expected from that. But it was enough to build stocks.
Yeah.
So we've seen the highest stock level in some time, historic, as you can see from that chart. 20% above a year ago and a third above the 5-year average. So that will continue to spook a few people.
Absolutely.
And then trade data from the US was a mixed result. Skim milk powder was positive, but still seeing a dip in Mexican demand. Probably also waiting for a sign that we're at the bottom.
Yeah.
Other regions were up. Southeast Asia was positive. And in cheese trade, that net trade was increasing. Again, it's been on a rise for some time, mostly about a reduction in imports.
Yeah.
More than anything.
With all that EU product no longer there.
Yeah. But there was, I guess, heartening strong demand growth for dry whey.
Yeah.
Which shows a reactivation of China's demand.
Yes, the pig herd rebuilding. So.
Yeah. And a couple of indicators, just to toss these in. This is going to be a feature I'm going to try to use.
Yeah, it's interesting stuff, isn't it? So this is...
So there's been a lot of talk, which you follow closely,
I do,
Joanne, on Twitter, of what's happening within the US, and it's important stuff. I mean, Twitter might be a crazy environment, but you are getting a lot of signals out of there about what's actually going on. This first chart is with the states that are rapidly reopening. So there's a lot of states, mostly Republican states. I'm sure that's not a coincidence.
I'm sure it's a coincidence.
Talking about reopening restaurants, cafes, bars, etc. And so what I did was add those up in terms of the number of people that are in those states benefiting from the ability to eat out again. Just over a third of the US is now populated in states that have announced reopenings during May. So that takes account of partial months, etc. So there's a fair bit of work in this calc. However, beware, because reopening food establishments tends to mean they're only operating at a quarter or a half, certainly no more than half capacity.
So those social distancing measures that are reducing the capacity are still going to be there. So it's a partial opening, really, rather than a full.
Very steady.
Everything's back to normal. We won't be there for quite some time.
No, but big states have yet to reopen. So California, New York, obviously a long way off. In the northeast,
and pretty important for food service. Those big states.
Second one is from a software provider called Womply, which has probably a fair few people following this data, showing year-on-year changes in channel spend, and they track different types of retail and spending out of the home. This is tracking grocery, showing how grocery spiked. Was starting to move in March. Already, as the surge pantry fill was underway, and then it's receded, but still staying at a fairly healthy clip.
It is. It's holding up there. But we're just seeing a little less negativity in restaurants in those last two readings.
Yeah, if you go to the Womply site, you'll see that restaurant line is trending upwards. Very weak trend, but it is trending upwards, and that's going to improve as we go into May.
Yeah.
And see more spending. So, brings us to the chart of the week. And Joanne, you've chosen something from Europe.
Yeah, I thought we'd go over the other side of the Atlantic and just have a look at what's happening, in Europe. Talking of finding the bottom of the market, we've just seen a little upturn in wholesale prices for skim milk powder in Europe. So, hopefully, some more positive signs there.
Hopefully, this is recovery.
Yeah.
Okay, we'll keep watching. But thank you for watching. We'll be back next week. This is how you can find us. Thanks for being with us.